on debt has been launched by the United Nations Trade and Development. And in Kenya, it's a new season for cryptocurrency. There's a new law. Zimbabwe has eased restriction of grain imports. Welcome to the program. I'm Ini John Mekwa, and we start from the global scene where oil prices rose by more than 4% today, extending gains from the previous session after the United States imposed sanctions on major Russian suppliers, Rosneft. And also, there's all of this is to quell the war that's going on in Ukraine. So we see that jump, especially following that sanctions rolled over right there. And U.S. said that it was prepared to take further action. It called on Moscow to agree immediately to a ceasefire in its war in Ukraine. Britain also, that's in the UK, they also have sanctioned Rosneft and Lukoil last week separately. EU countries approved a 19th package of sanctions against Russia for the war. Look at the numbers. It's very rare to see this kind of number. 5.21% jump. As of this morning, it was just about 3%. But here, 5.21, and the price has gone up to $65 in just one trading session. $65.84 for Brent. WTI has gone above 60, and you see it's at $61.70. Also, more than 5%, almost 5.5% jump is what we see. So everyone is sanctioning Russia, trying to curb its source of funding for the war. And that's why you see all of this sanctions against Russia crude. We believe that US, India, and China, they seem to be very close to having a deal that could stop China and India, two of the major patronizers of Russian oil. They may also step down on that. So sanction from the UK, sanction from the EU, sanction from the US, all to stop Russia. We'll see how Russia reacts to this. And of course, all of this follows that breakdown in the plan of a meeting between the Russian president and the US president that was supposed to take place to discuss how to end the war in Ukraine. And of course, it should spill over to the metal space. Gold prices edge lower, weighed down by firmer dollar as investors look forward to key U.S. inflation data that's due tomorrow, and also cues of interest rate cuts. And of course, sentiments around the oil also. So spot gold is down 0.2%, $4,084.29. US gold is almost 1% in the green, however. That's for the United States, and that's $4,100.90. For silver down 0.2%, $48.43. Platinum is down 0.6%, $1,612.90. Palladium is down 1.1% at $1,442.70. Now, gold has really had a major move this year. Spot gold, we see, of course, was down. But for the year, we've seen gold up at about 50% so far, in spite of what it's looking like now. So we've seen a lot of movement around the metals, sentiment, geopolitical sentiment, uncertainty, and trade relations become tense. Sevilla Forum on Debt has been launched at UNCTAD 16, and it's to tackle entrenched debt crisis in mostly developing countries. The United Nations Secretary General Antonio Guterres, Minister of Economy, Trade and Business of Spain, Carlos Gupardo, and then the Secretary General of UN Trade and Development, Rebecca, and the Under-Secretary General for Economic and Social Affairs also, they were there to announce the creation of Sevilla Forum on Debt during the 16th United Nations Conference on Trade and Development. That's, of course, happening in Geneva, and the conference ends on the 24th, that's tomorrow. And then back here in Africa, Zimbabwe is allowing millers to import maize 2 months after it announced the ban following an official downward revision of the country's 2024-2025 harvest. Zimbabwe has struggled to produce enough of the staple grain since 2000 because of droughts and disruption to commercial agriculture after the seizure of highly productive farms, most owned by white farmers, after colonists took them from black people early in 20th century. Zimbabwe banned maize imports in August after projecting a 2.3 million ton harvest that would be enough to meet the country's demands. However, a government notice seen shows that the authorities will, after projecting a 2.3 million ton harvest that would be enough to meet that, they say that the government has noticed that this may not cover the demand of the people and will allow imports by contractors in instances of need. And in Kenya, on the continent, they seem to have made history with the signing of their new landmark crypto bill, the Virtual Asset Service Providers Bill. And the country has formally recognized and legalized crypto. This move positions Kenya as one of the first African nations to implement a comprehensive regulatory framework for digital assets, putting it ahead of many global peers. But this is not just a Kenyan story. Implications for the continent at a time when countries across the continent are grappling with how to regulate digital assets. Well, Kenya's bill offers both a signal of legitimacy and a potential blueprint. Let's discuss this more with Sharon. Sharon Toom is from Yellow Card. She's a senior regional manager, East Africa at Yellow Card. Hi, Sharon. Good afternoon and welcome to the program.
Thank you. Thank you for having me.
Great. So what does this bill mean for businesses and consumers?
Definitely, this bill means legal certainty. So there are different players within the crypto and digital asset economy. The first part is the players, which is players like Yellow Card. For us, it creates that certainty that we are able to offer service within the legal framework. And then for the consumers who actually use, do payments in and out or wallet-to-wallet payments, peer-to-peer payments, it represents protection in terms of consumer protection and also accountability. For an industry as a whole, it's a framework within which we can operate legally and legally recognized. So this is a welcome move. I think it's a big win, not only for Kenya, but also for Africa.
Right. So we talked about how this would have implication for other parts of the continent. What lessons for Africa can we see from this Kenya's approach?
Yep. So from the Kenyan approach, what it clearly shows is regulation does not have to kill innovation. And this is very clear because you can see the regulators have decided to regulate the crypto industry as opposed to banning it. So they're bringing it into the regulatory fold. If you compare to other parts where there's regulation, for example, in South Africa, whereby digital assets are recognized as a part of the financial system of any other financial product, so they seek to regulate market conduct. Kenya has also taken something similar from that, borrowed a little bit from that, and also has borrowed a lot on the structures that tech actually had it put in place for Nigeria. So if you look at the bill, if you read the Kenyan bill, it's quite progressive, it's quite comprehensive, it covers most aspects, and it's quite clear. Also follows the regulation by principle rule, whereby it regulates market conduct, but also offers structure in which players and also users are able to operate in a legal way. So the approach is quite good. If you compare it to other parts of the world. Also, it borrows heavily from the Europe MICA, unified sort of system of licensing as well. Though it has striking also differences with that regulatory framework that was put in place in Europe, whereby for Kenya specifically, what is very progressive is that it recognizes digital assets as part of the real payment economy. So it recognizes digital payments in and out as part of payment. So this is big. This is revolutionizing how payments will be done within Kenya and also across Africa.
So from Yellow Card's perspective now, what should Africa be doing? Is everything okay? Is it set from your observation for implementation and can be replicated in other parts of the continent?
Absolutely. So if, again, going back to how the structure of the Kenyan bill looks like, one of the key things that I think came out very clearly is the clarity. So the definitions are very clear of who and what is covered. And then also what can be borrowed is the regulation by principle. So basically, the principles of anti-money laundering, principles of consumer protection, of reporting and transparency have been included within the framework. So I think it's quite progressive and should be emulated, should be an African blueprint.
Thank you so much, Sharon Tum, Yellow Card Senior Regional Manager for East Africa.
Thank you.
All right, so let's discuss commodity now, and it's an essential one, detergents. I mean, they say cleanliness is next to godliness, so you can't do without detergent, an essential item used daily, every day, in the office, at home, everywhere. But unfortunately, as with other commodities, we've seen the price surge about 13%, 13.5%, in fact. Talking about a 900-gram pack has gone up from about 1,850 to 2,100. Let's find out the drivers of this with Rosemary Ahira, analyst with Financial Derivatives Company. Hi, Rosemary. Welcome to the program. What's driving this price of detergents?
Hello, Ini. Thank you so much for having me on the show. So it's really simple. The main driver of the increase in the price of detergents is increase in cost of production, both for inputs that are sourced from abroad and with regards to domestic factors as well. So one key ingredient known as linear alkyl benzene sulfonic acid is a key ingredient used in the production of detergents. The price of this input has actually increased from about $1,397 per metric ton to a staggering 1,870 to $810 per metric ton. So if we now convert this to naira, it has went up from 2.13 million per metric ton to a staggering 2.87 million per metric ton. So when it finally lands here, that means producers are now paying 34.5% more than they would have paid in the beginning of the year. And if you look at domestic factors, a lot of industries have to generate their own power. So increased cost of power generation because of the dependence on diesel. You now have transportation and logistics cost. Then the cost of packaging as well is also a major contributor. So when we look at demand, I will say demand for this commodity is relatively inelastic. And I will explain this using the income and the substitution effects. So with regards to the income effects, with this, since the price is increasing faster than consumers' income, they feel poorer. So what they tend to do is either use less detergents or they kind of stretch out what they already have. So use it for a longer period of time. That is little bit reducing the amounts they typically use than normal. So when it comes to the substitution effects, it's rather slow. Although that substitutes like laundry bars and native soaps that are relatively cheap. This is because of changing consumer habits and modernization. I would say it is silly for you to want to put in laundry bar in your washing machine to wash your clothes. People would rather use detergent. So this is what has made demand for this commodity relatively inelastic.
Yeah, so we've had inflation drop in Nigeria 6 consecutive months. How come this didn't reflect in the price of detergent?
Well, we are seeing a disinflation. That doesn't necessarily mean that prices are not increasing. Prices are still increasing, but at a much slower pace. So previously, inflation was about 20.12%, then it dropped to 18.02%. it's a slower pace of price increase, not that prices are not increasing at all. Like I mentioned before, we still have immense domestic cost pressures that are pushing into prices, like cost of power generation, transportation, packaging, and the likes, and not to even talk of external factors like the imported costs that we cannot control. So prices are still rising, but at a much slower pace. So we are still going to see so that is why detergent is still relatively expensive, and we're not seeing inflation show right now. We'll probably start seeing that between a lag of 1 to 2 production cycles, and that will be in coming months if this disinflation trend should persist.
Yeah, well, I wonder if it will with the new price of petrol and transportation and all. But thank you so much, Rosemary Hira, for your time on the program.
Thank you so much for having me.
Okay, so let's head to the markets now and see what the numbers look like. Well, I know that for the Nigerian Stock Exchange, the market opened at 153, but at intraday we're at 154. The market is on the run again at 0.47%. That's at intraday. So I wonder what the number would look like at the close of trade. It'll be interesting to see because in spite of the huge move yesterday, I believe the market gained a whole lot, almost a trillion naira or something. The banking sector, which is the major driver of the sentiment in the market, closed in the red. So I do hope that today investors will look that way and we'll see a recovery on that counter. And the most liquid counter is my favorite one. For Johannesburg, they've gone up to 102,000 at more than 1% up at intraday. Egypt is also positive at this time, 0.16% in the green, 37,634.92, while Nairobi closed also positive on Wednesday, 178.39 or 36. Then in the Middle East, we see also mostly positive sentiment at intraday from Dubai, 0.5% or more at 6,008. Abu Dhabi is, however, the only one in the red at intraday. It's 10,192.15, but it shed 0.35%. Saudi Arabia is positive, 0.10. Qatar also positive, 0.27. Moving over to the United States, we saw that Dow Jones sustains the red color in spite of all those earnings that are coming out. The S&P also red, as well as Nasdaq. But a slew of third quarter earnings came out after market close from companies including Tesla. We saw that Tesla there. So while in Europe it wasn't doing so good, in the US it did hit its target. IBM, Moderna, Lam Research, Tesla kicked off reports from Magnificent Seven. Saw shares dip 3% on the back of mixed third quarter results. IBM also shared after the tech company beat Wall Street sentiment, but reported in line software revenue. So it's a red one for US for the features, and we'll see what the numbers would look like when markets open proper. We move over to Asia. South Korea's Kospi index, they raised earlier gains on Thursday after touching a record high following the central bank's decision to keep its benchmark interest rates unchanged at 2.5%, but it was expected. So we see it lose almost 1% at the close of trade, even though it opened in the green. The Nikkei of Japan seems to have lost that excitement of having the first female prime minister and the stimulus package that she's presenting to the people to deal with inflation, among other things. So it's back to reality now for investors, 1.35. Hang Seng is, however, positive, 0.72%. Looking at the other parts of the market, if I could have that, Shanghai and India. India seems to be standing on its own mostly these days, even among the Asian markets. Mostly, we've seen them retain their color, which is green, and they've been holding on that for a bit. But let's see what color the market is at Europe with Lars Holter. Hi, Lars. Good afternoon. What are investors doing this afternoon?
Hello, Ini. How you doing? Well, markets here actually are red as well, albeit not by far. The DAX down about 0.25%. And one stock we might want to have a look at is SAP, as the biggest German tech company. They had a pretty strong report out, although a growth of their cloud business in particular was a bit less than some analysts had expected. And I find that quite interesting, Ini, because you just talked about IBM over on Wall Street also being a little weaker in their cloud business. So that is making tech investors a bit nervous. But while we're seeing losses for a few tech shares on Wall Street as well as in Europe, you got to see they've also, of course, been trading at an extremely high level. So this is not very worrying at this point.
And while it seems everybody agrees with sanctioning Russia because everybody wants an end to the war going on in Ukraine, for the US and China, the competition is still stiff. We see China has overtaken the US as Germany's biggest trading partner.
Yeah, indeed. It's interesting what happened here. We have obviously the U.S. with a decline in trade, U.S. tariffs, a main part of the story with the trade war starting by Trump here, making many German goods harder to sell in the U.S. Among those, of course, cars. We often talked about that. They were long a bestseller in the United States, and maybe even a reason for the tariffs, as Trump himself had often explained. He has often, complained about all the cars being sold there, and he wanted to get those imports from Germany down, and that's exactly what happened with the tariffs. Now, German exports to the U.S. dropping by almost 8% since the beginning of the year. Meanwhile, interestingly enough, any exports to China are down as well, also not least due to weakness in auto sales there. However, Germany is importing a lot more from China, and that adds to the trade volume here and gives China the top spot now as Germany's most important trading partner by sheer amount.
So is that a good thing? Is it a bad thing?
Well, I got to tell you, most analysts have a huge problem with what's happening. And it's not so much about who we're buying things from. It's more about the fact that Germany is becoming a dumping ground, it seems, for Chinese goods. Lots of goods, especially that China can no longer sell to the U.S. in a lucrative way because of the tariffs. And now they're rerouting their export streams, sending much of their product to Germany, some other markets, of course, as well. But that, of course, is putting price pressure on markets here on German goods within our country. And what's more, according to some analysts also, China is not only a trading partner, it's becoming more of a systemic rival to several German industries. So the long-term outlook for Germany's industrial sector is not very good right now, with China playing an ever-increasing role.
Yeah, well, that competition with local manufacturers, I guess that's where the friction will start from, and the call for government intervention. Well, thank you so much, Lars, for bringing us up to date on that.
Definitely. Thank you, Ini.
Okay, so let's see what's happening in the crypto space at this time where we have so much red. We do have a change of color for BTC, but we've seen better days than this for Bitcoin. It's at $109,057.79. It's gained 0.84% at intraday. Ethereum is also up, but not back to that 4,000 level. So we're still underplaying, if we could say that. But we have more greens today compared to what we had yesterday. Looking at the stories making the headlines in the crypto space, we see EU targeting Russian A7A5 stablecoin. It's part of the sanctions, the latest sanctions against crypto evasion. The European Union, they've imposed what they call the 19th sanctions package against Russia, and they're targeting the crypto platform for the first time to curb evasion tactics. And this includes bans on crypto payment providers, the ruble-backed A7A5 stablecoin, and entities in multiple countries, aiding Moscow's circumvention of restrictions aiming to limit funding for that war that's going on in Ukraine. Everybody is united on that. Also, can you believe this? North Korea has been accused of stealing $2.84 billion in crypto since 2024. Here is the big one. They accuse them of working with China. You want to read that up and find out what that's about, but that's the much we can take. We see Waziri X also relaunching after crippling $230 million hack. So a lot of things happening there. You want to read it up and you might be interested in it, but that's it on Business Incorporated. Thank you so much for being a part of it. We do appreciate your time, but we have a final one tomorrow, so you don't want to miss it. I'll be on at 10 a.m., so we'll do the whole day tomorrow. I'm John Mekwa to take care.